Welcome everybody to today's client support webinar. My name is Bennett McDowell with TradersCoach.com, and today, of course, is December 1st. Now, let me know in terms of if you want the webcam on or off. Sometimes that scrunches the screen a little bit. So if you want me to cut that off, I'll be glad to do that, okay? I can go either way. Also, if we have any technical situations coming up, in terms of slowness or something, I'll probably cut it off at that point too. All right, so hope everybody is doing well. Can't believe it's December already, getting closer to the next holiday here, and Christmas, of course, and or whatever you celebrate, and the shortest time of the year, right? Unbelievable. All right, so let's see what we're going to do. Let's quickly go through our administrational items here because I have to do this, And first one is the risk disclaimer. We want you to know there are risks involved in trading the financial markets. Also to check with your money manager or financial advisor, whoever handles your finances, to be sure concepts that we talk about here or even trade recommendations are suitable for you, because we don't know your personal situation, and of course they do. Also realize that the big deal is that we work in a realm of probabilities, not certainties in the markets. There's no guarantees. And so always use money you can afford to risk in the markets. In case you lose it, it doesn't hurt you, right? So that's important. And know, of course, how to do risk control. And you can come to our website for help on that if you need it, because we are very good at that. All right, so I've written several books, all published by major publishers, Wiley or McGraw-Hill, that are available in our Amazon area. We're also about to embark on a book series, so that's coming out very shortly, a couple months, I think, and that'll be kind of fun, and those will be on Amazon as well. So we cover everything from risk control to different forms of technical analysis. So if you haven't gotten any of these books, great place to start. Now, let me talk a little bit about the trading approach. A lot of people here are new, and I want to welcome each and every one of you. And I want to kind of make it clear of, how we package our software and so forth. So a lot of people will start out with the ART software, which is this over here. And what this does is it's going to give you those triangles you see on the chart, as well as the ART reversals, the 1B, 2Bs, and the colors, the price bars. And you can use candles, or you can use open, high, and low price bars, whatever suits your fancy on that. So when you think of ART, think of it actually as looking at price patterns and the momentum that forms those price patterns, and that's what generates the signals. So those go right smack on the price area of the chart. And then under that, at the very bottom, is where the indicators are. And so we've got actually 4 possible indicators that you can add on. So one of the big distinctions here is that we have indicators, we have scanners, and then we have risk control. And so a lot of people get confused. When they think they buy ART, they think they get everything. And it's not packaged that way because, it would be to get the entire bundle, all right, is pretty expensive. So what we decided to do with this is really package them in a la carte situation. I mean, if you want to buy the whole bundle, you can, but a lot of people will start out with ART, all right? That does not include the OWL, PTF, or TLM, or ERI, or the scanners at that point. I think with ART, we do usually give you the trade size calculator. That's called the TSC. But we have another calculator called the RRC, and I'll cover that in a minute. That's an upgrade from the trade size calculator. So when we talk about the toolkit, how many out there have bought the toolkit? I think probably quite a few of you have the toolkit out there. Okay, good. All right, so the toolkit is basically the OWL, PTF, and TLM. And it can be used in conjunction with the ART, or it can be used, each indicator, each piece of software can be used independently. So you could buy each and every one of these a la carte if you wanted to. But a lot of people that buy ART, all right, will like the toolkit. And I'll show you the toolkit and kind of what it does. But basically the OWL measures momentum. And so we use that to confirm trades generated by ART. It also helps us count Elliott wave 3s. It finds the Elliott wave 3s. And then we have the PTF, which indicates during certain breakouts or breakdowns, if that is the bottom or top of a market. And it's really helpful because it's basically color coded at the bottom. So when a market breaks to the upside and it creates a green PTF and then pulls back, well, there's a 75% probability that the market's going to return and take out that high. So that's good information to know. And so we package that in an indicator down at the bottom called the PTF. And then the TLM takes the hassles out of drawing trend lines because it does it automatically for you. So that kind of thing, all right? So those are really good to use with art. Then we came up with a kind of a cool indicator that is not part of the toolkit, but is an add-on called the ERI, or Emotional Reader Index, which measures greed and fear in the market. And what it does is it takes a look at prices and their distances from the trend lines in that trend. And when they get manic, either to the upside or the downside, that produces fear. That shows there's fear and greed in the market, and it produces a fear or greed emotional reader index signal. All right, so that's very helpful for scaling out or things of that nature. And usually when that greed bar is generated, if the greed continues, it'll pop on top of it. If it comes back, probably it's going to go back to the trend line then. So that's really helpful. So that's what can be on the chart. So when you think of this top line of products here, I want you to think of actual software studies that go on the charts. All right. Then we have the scanners down here. Let me just clear this up. So then we have the scanners down here. Again, you can buy them a la carte. We have the trade confirmer here, the Elliott wave scanner here, and the turbo scanner. So when we talk about the trade confirmer, these are pieces of software that do not go on the chart. They go in the actual scanning areas of the charting platform. And currently now, of all the compatible charting platforms, there are 3 that have scanners that we use. One is NinjaTrader's Market Analyzer, and you'll see that on a chart when I show it to you in just a minute. The other one is Tradestation's Radar Screen, and then Multi-Charts Scanner. So that's where you can load these scanners. So if you're using eSignal or one of the platforms that does not have scanning capabilities that are compatible with ours, then you cannot use these scanners on that platform. However, a lot of people that use eSignal and want the scanners will download free NinjaTrader and import the eSignal data into their NinjaTrader, and they have the scanners. Okay, so there's lots of workarounds, so to speak. All right, so the trade confirmer, what it does is it's actually looking at the toolkit, and it's you can set it up to scan on any time frame, but it's looking at the OWL, PTF, and TLM. And the nice thing about that is that, let's say you're looking at 100 stocks, but you don't want to have 100 charts open, right? So what you want to do there is have the scanner running, the trade confirmer scanner running, and you can see all the colors of the toolkit. You can see all the toolkit readings. And then you can set it up so there's a column there. You can set them up when all are green or all are red. It will show up as red or green in a column in the actual scan column, but you'll be able to see them all. So the trade confirmer is four columns, and I'll show you this in just a little bit. Then you have the Elliott wave scanner. And the Elliott wave scanner, what this does is it has a built-in OWL, does not include the charting software, but it has a built-in OWL that basically finds wave 3 and finds wave 5 for you. So 3 and 5. All right, so that's kind of cool. All right, and then we have the turbo scanner, which has the entire art signals built into it that scans for art signals. So trade confirmer has the toolkit built in, the Elliott wave has the OWL built in, and the turbo scanner has the art built in. Okay, so that's how we kind of made those. Now, when you get the trade confirmer, you get the Elliott wave scanner, you get the turbo scanner. They are scanners. Even though they have all that other stuff built into them, they do not include the charting software, which is up here. So this is separate. So you could have the scanners without these running in the background, but it's nice to have these because then you can go to the chart and see what it looks like. Because if you have just the scanners, you're not going to have the charting software, okay? And then finally, the risk reward calculator, or what I call the series of risk control software, consists of, like I said before, the trade size calculator, the risk reward calculator, and also the trader's assistant. I ran out of spaces to put boxes, so I only put the risk reward calculator up there. So the trade size calculator we usually include with the Art Home Study course, and that gives you your trade size. The risk reward calculator basically does everything the trade size calculator does, but includes an area where you can put the target in, and it will give you your risk to reward and the amount of profit you would get if you hit your target. And then the trader's assistant keeps track of all your trades. I went over this last week, and this is a great piece of software to analyze how you're doing. All right, basically it'll tell you your payoff ratio, your win ratio, etc. And then you'll know how much percent to risk on each trade based on your actual trading results. So these do not require any charting platform. They are independent software. Okay, so you can use these with anything. All right, or alone. You don't even have to open a charting software to use that. Okay, so those are independent software. So before I go on, any questions? Any questions on this? Larry, welcome. How are you? Good to have you back. All right, super. Good to have you here. I assume everybody can hear me okay? Hopefully, after I went through that. Okay, good. This is being recorded. Yes, all the client supports are always recorded, okay? All right, now in addition to these tools here, these are software tools. We have a lot of other services. You're at one right now. This is the client support service, and it's about a half an hour long each Wednesday, and I handle any questions that come in. And also, too, coaching. Coaching is a very, very popular thing. In fact, we may even have a waiting list at this point. I do a lot of coaching each and every week, and with the software we use, we can do that literally anywhere in the world. So if you're, in fact, I have several people overseas, and basically I can see their charts, they can see my charts, we talk in real time, and so it's just like having me in the room, and we go over some of your weaknesses and your strengths and combine them and get a set of rules that you can use consistently. It's an excellent program. Also, if you're having psychological issues in terms of getting out of trends too soon, hard time pulling the trigger, making emotional trades, you're in a trade, you're up 30%, you emotionally want to get out, but the system says stay in, things like that. All right, so we work on things that can help you with that. All right, so any questions on this? Yes, compatible charting platforms. eSignal for the charting software, not the scanners. NinjaTrader for everything. All right, Tradestation for everything. Multi-charts for everything. MT4, they don't have a scanner, so just the charting programs. MT5, same thing. Let's see what else we got out there. I think that's pretty much it. All right, so there you have it. All right, so I just want to cover that because I think that's a good thing to make clear so everybody has a good understanding of what the tools are. All right, so this is Tradestation. All right, this happens to have the a crypto up there right now. The scanner's at the top. Okay, you can see the 4 columns for the trade confirmer, and I've got it divided. I got the scanner divided into basically you're looking at the same thing repeated on this side as this side, so you have the trade confirmer again. Then you have the Elliott wave scanner, and then the turbo scanner. All right, and then all the symbols I load down in here, and then I connect them. This is really an important thing to learn how to do. So I connect them by doing the symbol lock. Okay. Mark's asking, how about TradingView? We've kind of contacted them and tried to get on board with them because it's a kind of a good platform, but they I don't think they really do much unless they're it's their software or they control the software, Mark. So that they really never really got back to us in terms of showing any kind of excitement towards programming third-party vendors. Now, you may want to send them an email and say, hey, I'm using the ART system. I'd love to get this on TradingView. Can you contact them or get back to them because they would be interested in doing it? Why don't you send them an email for us and let them and ask them. They hear from the users, they may be more apt to do it. And that would be good. Because yeah, I think it's a pretty good program, but if it can't use our stuff, I'm not going to use it. All right, so that's kind of the deal with that. All right, so that's how the scanners look on TradeStation, and here's how they look on Ninja. All right, so same information, just a little bit different presentation. All right, so here's the trade confirmer. Notice you have colors on the background. See the red, green, and so forth. If you go back to TradeStation, if I can find it, notice you don't have colors in the background, but you have colored text. All right, so it does the same thing. It's just a little bit different presentation. And then you have the Elliott wave and the turbo scanner and so forth. So that type of thing. And both in TradeStation's radar screen as well as in the market analyzer. See, it says market analyzer up here. Okay, you can create multiple tabs. Now, one of the warnings I'm going to give you is that depending on your computer hardware, be careful not to overdo it. Some people will be loading the NASDAQ 100, the S&P 500, all the futures, all the cryptos, and whether they know it or not, they could be loading 500 symbols plus a bunch of charts. So when you start a charting platform with that much computing necessary, it can take a few minutes to boot up. So just a food for thought, okay? Be careful how many symbols, and also be careful of the history that you're putting on the charts. Now, on the charts themselves, let me just go to this one here. When I look at a daily chart, I put 1500, and I always use bars back. I don't use days. All right, and then I save it by going down here to preset, click on that, and save. So I put 1500 and use bars. So that's kind of a good way of doing it, okay? I like using the bars. Now in TradeStation, okay, you gotta be really careful on intraday charts, because on the intraday charts, if you're not careful, you'll have it set up by default to look back a year. And if you're looking at 5-minute charts, you don't need a year's worth of data to think of all the computer resources you're using to get that information that you don't need. All right, so don't forget that. All right, think about that. So you can set, all this stuff can be set up, through the data situations on either platform. Okay, data here, edit symbol, and you can go back here, last date, days bars back. Okay, see, I'm using 600 on the intradays because that's all I need for that. Okay, so that kind of thing. So all these platforms, no matter what you use, have settings for this type of thing. Okay, so it just depends on how you want to work it. All right, so keep that in mind when you're setting up your stuff. The other thing that's important, and I did a whole video on this a while back, is templates. When you buy the ART system, you have you have ART pyramids, you have color bars, and you have reversals. So that's 3 studies right there. If you start adding the OWL, PTF, TLM, and ERI, now you're up to 7. So you don't want to load those every time individually. Instead, you want to load them once on a chart, right click, okay, studies, and in TradeStation, they call them groups. And you want to add that as a group and set it up as a default. So when you open a chart, boom, they automatically load. Now you may have to change the colors as well on some of the studies. You can go to edit studies. This is TradeStation, same thing on Ninja. Go to ART pyramids, customize, and then go to inputs. All right, and here's where you can change all the colors, okay? So if you're using a white background, you may need a different set of colors. You may prefer a different set of colors than you use on a black background in terms of cosmetics. The signals are going to be the same. It's how they look to you. So all that can be done on Ninja. I've got a white background. So I go to indicators, and then I go to pyramids for this example, and here are the colors here. So you can, we made it so you can adjust everything to your needs and likings. And then of course on Ninja, they actually call templates. Amazing, huh? And then you can save that as there and save as default. So that way, when you bring up a new chart all the time, you don't have to load 7 studies. I mean, what a pain that would be, right? All right, the other thing too is on some of these charting platforms, once you have a chart created, okay, you can just right click like on Ninja and duplicate it. So if you want to have 3 screens like mine, you get one set up and then duplicate the other 2, but you do have to go in and change the time frames. Okay, make sure you do that. This is set up for, you know, minutes, dailies, weeklies. When I do intraday trading, like in our trading room, they're set up like this. This happens to be the Bitcoin 1 minute time frame, 15-second, 5-minute, and then I basically have a symbol lock between the 2, so I can, you know, toggle to the crude oil trade, you know, and then I can toggle to the MES. These are all micros, so things like that. Nice trade down here, pyramid, 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 okay? And the PTF just turned yellow. So, you know, regarding the time frame you trade, all right, you basically set your charts up with the colors you like and the templates you like, and you're good to go. All right. Okay, so let's get some questions here. Any questions? I've done a lot of talking here, and I kind of wanted just to cover that, but any questions that you have there at home? The other great thing, while I'm waiting for some of these questions, is don't forget we have our day trading room. Now, you may not be a day trader, but the day trading room is an excellent place to learn how we use the software. So the learning curve is very short in there because, you know, in a 1 minute time frame, we're going to make a lot of trades. So you're going to see me using the software a lot. So you're going to learn how to use the software in real time in the day trading room. So it's an excellent place to come. And we've done real well in there. So, you know, there it is. And we give you all the stats. We give you the returns. We give you, we record each session, and I keep all the statistics of our P&L in the Trader's Assistant and post that after every session. So full transparency in there. So you may want to check that out. It's a lot of fun. We have a great group in there, great time. All right, so let's see what else we got cooking here. All right, notice how here I have the risk to reward calculator. So let me just mention that. See that over here? So this has nothing to do with the charting platform. See, I can move it all around, nothing to do with it. It's an independent software. And when I put it right here like this, I kind of make room for it by positioning my charts to allow room for it. You can do this on Tradestation, Ninja, whatever platform you want. So it's always in front of me, okay? I don't want to have it buried behind a chart. I'll never find it. So I move the charts over and resize them so I can see the risk to reward. And the risk to reward calculator looks just like the trade size calculator, but at the bottom, we added this section here. So you put your target price in here, and it gives you your ratio and your target price. And of course, we don't like to take trades unless the risk to reward ratio is 2 or better. And so that kind of gives us a quick calc on where we're going with that trade. And then of course, we set it up to futures or stocks. Now, the key thing about both calculators is the point value. So notice I have 5 in here. Okay, this was actually for crude oil E-mini, I guess, maybe. Let me just set this up for MES, the day trading margin 350, okay? So that's how you would do it. You put the day trading margin in if you're a day trader. If not, if you're a position trader, you put the regular margin in for futures and the point value. So if you're trading the regular E-mini, you put 50. All right, so you constantly, with futures, you have to change that. With stocks, when you set it up for stocks, you don't really have to mess with the point value at all, just leave it at 1. So the point value for the E-mini is $50 a point because there's 4 ticks in a point at $12.50 a tick, right? So that's why you put 50. In the micro E-mini, it's the same price, it's just 1/10 of the value, okay? So you drop that down to 5. Now in stocks, you just leave the point value at 1, whether it's an ETF or a stock. So you never have to mess with it. The margin on this area here is whether you have a stock margin account or an all cash account. So it has nothing to do, it's not the same as the margin that we put in for futures. All right, so in a stock account, you're gonna put in 150% if the margin is 50%. If it's an all cash account, you put 100. And so that's how we do it. We have instructions on all this stuff, so whenever you buy the software, it's kind of all there, okay? All right, look how nice that MES trade moving down. Now, notice we have another, so the stop would be here on this trade, but we still have all this. It's all red still. So I'm not looking to get out of this trade. Now, we may have a retracement, yes, but the entry to the trade up here, okay, was here, because when this went south of the pyramid, this was red. No green down here, okay? And so that's a go, all right? So that's a trade. We don't use the Trendline Master for entries, only for scaling out or add-ons. So there you have it. And now we're down here. So we got a profitable trade. So if this, and notice we got one here. So if this one turns yellow and this one remains red, I may scale out a third. If this one turns yellow, I may scale out a half instead. Okay, I'll have to see. If they both turn yellow, which I think they will at the same time, then I'll take out a half. If this one only changes on the left, I'll take out a third. That's how I would work that, okay? And this is a 1-minute chart. This is a 15-second chart, which seems to some people like, oh my God, that's so freaking short. Well, when we day traded a 2-hour time frame on Tuesdays and Thursdays, it's not so, we're so structured that sometimes it takes us a half an hour to 45 minutes to even get into a trade. So it's not really that short if you use risk control, okay? So it's that kind of thing there, okay? I'm not sure Gene is here, Larry, so I don't know what you have, okay? But you'll have to, you'll have to start your system and see what you got, okay? Okay, so Art, how you doing, Art? I like how the wave 3 table label moved when the owl went deeper. Yes, and that's what it does, okay? So, when you're looking at this, you may see this little wave 3 over here, but as soon as it goes below here, it's now deeper, so this technically is wave 3. And so the actual wave 3 will change, okay? Now, I'm just going over, this is kind of the way we do it in the day trading world. Notice we have a yellow here, okay? But we also have a pyramid here. So you could immediately take a third off the table here because this went yellow. That's not an emotional decision, okay? Or you could put your stop right here as well because you're still got a red here. So how you want to handle that is totally up to you, okay? Totally up to you. But either way, you're trading within rule guidelines. So if I wanted to put my stop here, I could do that, or I could just scale out a third right now. So that's the kind of thing I kind of look at. I also look at how much profit I've made. So if I'm trading a 1% risk on something and, depending on my account, that gives me X amount of dollars, 500 bucks or something, then I know that is the norm of what I would make on a trade. Then I would also include that in my rules of scaling out. So in other words, when the market gives me a profit that I normally get on a big move, then that also comes into effect of if I get a signal to get out, I may act on that signal. I would not get out just based on the dollars alone. You understand what I'm saying? The other thing too, you'll hear me talk a lot about is what I call inflection points. So inflection points, you start, wherever it started the trend down and wherever it may bottom, the inflection point's about halfway. So the market has a tendency to move to those inflection points. What it does at the inflection point is priceless. Kind of like the Visa MasterCard commercials, remember? If it goes higher, then that's an indication that this could be a firm bottom. If it bounces off and goes lower, that's an indication it's going down. So it wouldn't surprise me if we get up to this inflection point, we have red here, and head back down. So this stop is really sitting pretty right here. You may decide, because you have red here and red here, not to scale out at all. These are the choices you can make on your own, but notice how structured it is. You're doing it off the rules. You understand? So now you got another pyramid here that formed here. And, oh, well, actually not formed, but it got up above here. So now you're out if you wanted to. You'd be out of a third on this if you used that pyramid on the short-term time frame. So this is how you can use 3 time frames to manage the trade. Kind of cool, huh? This stuff, you know, unless, you know, looking at the website, looking at the stuff, you'll have no idea of what I just told you because it's not apparent. But this is the power behind this software. It teaches you how to trade as the market unfolds and gives you options. And let's face it, a lot of times we choose an option to scale out based on a rule, based on our fear. All right, because technically speaking, this is red and this is red. So it's going lower. If I choose to scale out here based on this, it's because I'm afraid it's going to come up and maybe go higher than my pyramid. So that's a fear coming into my decision making. But that's why I'm only taking a third or a half off there. Well, it's a third, okay? Because I realize that I still want to be short, but I do want to protect myself in case things change. And again, that's up to you, how you want to do it. But fear will come in to your decision making. However, put a fence of structure around when you can act on that fear. Does that make sense? That's what we're doing by using the tools. Now we have another pyramid possibly forming here. Okay, we'll see. Prices continue up to the inflection point, that will go away. If they don't, oh, that's going to give us a gift because then we can move our stop right down here. The other thing you have to realize is a lot of times when you're looking at the long-term picture, and believe it or not, 5 minutes compared to a 1 minute is long-term. But a lot of times if you're trying to make a target on the 5 minute, all right, you may not make it because of the fact that you may get stopped out based on your primary time frame. So always try to have targets based on the primary time frame because it's hard to reach the targets on the higher time frame if you're going to be managing the trade primarily on the primary time frame, if that makes sense. Any questions? Love this stuff. Isn't that great? Now, I have no news on. I have nothing on to distract me unless I want to be distracted, okay? Sometimes, you know, if, you know, everybody's different. If music or something like that calms you down, then play that. That's fine. If watching the news creates a distraction so you're not emotionally trading, fine. But if the news that you have on is creating anxiety, emotion, then don't have it on. You don't need it. Everything you need to know is in the price. Yeah, Larry, just get a hold of Jean. She'll be glad to talk to you about what you got. I don't know what you got offhand. All right, let's see here. Art, awesome stuff. 1 minute chart. Yep. Bennett, this is from Gray. Bennett, if you could use only the pyramids or the art indicators, which would you pick? You know, it's amazing what a good job the pyramids do. Okay. I kind of what I do with the indicators at the bottom, I like to use these indicators here for entries. I do not use the TLM except for add-ons because I want to make sure I have a trend established before I start pyramiding onto my position, right? So I don't want to do that unless the trend is established. But when I get in early on a trend, so here's your stop. Look at that. Boom. Okay. And now the spot went back to red. So we're good to go. Okay. So now you got out of here with the third. We got a stop here. All right. You could get out of another third here if you wanted to, but why would you do that considering your stop is so close right now? I would now look at this. Now we got a yellow here and a red here. Interesting. Okay. So now if this goes yellow and this goes yellow, I might take another third out. And then if that's the second time I took a third out, then I can't scale out anymore. That's what my rules put my fence around my emotions. So my stop for the remaining third would have to be here without a movement. That way, no matter what happens, I stay in the trend a little bit, okay? So we got a yellow here. Let's see if we get a yellow over here. Okay, let's see what happens. It's still very, very bullish. So I probably will stay short and not get out at all because my stop is so close now. Do you see how managing the trade changes? All right, if this pyramid was not here, then I might consider taking some off the table. Guess what? Went back to the red. So the pyramid saved our butt on that one because it kept us from scaling out. Now the market's trailing down again. This is not fast, folks. This is, you know, this is pretty orderly. We're not making 100 trades a minute. You know, we're just orderly following the system down on a very short time frame. This is exactly what we do in the day trading. I have no idea where we're going to get out. And I really didn't do an Elliott wave analysis on this except to know that we're in a downtrend. So, and we're in a wave 3. So I want to stay short as long as possible. So back to Gray is asking which I like better. Okay, I really didn't answer your question. Art indicators, which would you pick? I start with the pyramids first and then add the indicators on when you can. This one indicator, I mean, you can see, I mean, this is good because it confirms the trades and gives us the Elliott wave, but this also tells me I have more lows here. So it kind of helps me stay with the trend. Now, granted, you know, the lowest low in that red area is here, so we're not talking a lot, but it keeps me centered. And you could use the same type of rule base on any time frame, because if I remove the X and Y axis, which would be the price and time, you wouldn't know if you were looking at a daily chart or a minute chart or a 5-minute chart or a weekly chart. You wouldn't, really. And if I didn't tell you what market it was, then you wouldn't know what the prices were either, okay? Kind of cool, huh? Now, I also know that we're getting pretty deep into this wave 3 because we've got 1, 2, 3, 4 pyramids in a row on this. And look at all the ones we got on the 60. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right. That's pretty maxing. So you're going to get a wave 4, and wave 4 is going to come up way up here. So we're talking probably somewhere here. So could get stopped out on this. And the pyramids are designed to keep you in the swing. So if you wanted to make it all the way to 5 and suffer through this pullback, then you're not going to use this for your stop. It has to be pretty high, like more above the, you draw the fibs and it has to be above the fibs. I wouldn't do it that way because I'm managing the trade on the MES 1 minute. So I'd much rather have this thing come up and then get back in if I want to. But this is a great example because it shows you, once again, how to use the 3 time frames as the market's unfolding. So I know we're over a little bit today, but it's kind of I think this is good for you all to see this because it kind of opens your eyes, especially if you're new. We got a lot of new people here about how powerful the software is. And once you learn how to use it, how flexible it can be. All right, all PTFs read, so still moving down. All right, so any questions on this? I guess we'll go ahead and end here because I'm kind of like 15 minutes over the regular time. And, but it's just, gotta love this stuff, right? All right, so let me just see if there's anything I missed here. Great, did I answer your question all okay? Hopefully I did. My pleasure. Okay, great. So ARC pyramids first, because that gives you your structure. The thing with the ARC pyramids is, you know, before we enter the trade, for example, on this one, we would have used this pyramid up here, right? So let's just go over this. Let's just say we have a $50,000 account here. I'll end the session right after this, but let's just do this. So our stop is going to be at the top of the pyramid, the flat part. So that has a high of 46, 45, 25. So 46, 45.50, 1 tick over is going to be our stop. Our entry would have been 1 tick below the pyramid, right? So this is our exit. Our entry is going to be 4644.50. All right, so if we go, 0.25, 1 tick under, short trade. So if we go here, we've got it set up already for the right market. You go 4644.25, put your stop in at 4645.50. Did I get that right? 46, hit calculate, and 80 contracts because the stop and the entry is so close. Okay. So cool stuff. All right, Paul saying, let's see, training room, best to learn. Cool. All right. All right, so that's kind of the deal with that. Now notice we got a yellow PTF now here and bullish divergence building here. So this would probably be a good place to take a third off. And then don't take any more off. Okay. All right, anyway, it gives you an idea of how to use the different time frames for different types of management of the trade. Lower time frame could be for using for possible scaling outs. Primary time frame is always your risk control and your moving stops and so forth, okay? I'll end here. Thank you so much for coming today. We'll be back next week. Always bring your questions. This is what client support's all about. And have a great week. And always use risk control. Got to use risk control. All right. So take care, everybody. Thanks so much.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors alike. We've developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It is because of our years of experience, attention to detail, and our exceptional customer service that TradersCoach.com is the right choice for you. Call us today.